no humans required in between, fully frictionless. This is kind of the vision we have, and this is, I think, what it needs to go to this global scale of AI agents.
How SQD and SummerFi is kind of like this on-chain version of Snowflake, or could be what they have done for that world into this kind of newer decentralized AI world.
I see data as a public utility. It should be kind of owned by no one, but kind of governed by everyone.
Welcome back to the Rollup. We are your hosts. I'm Andy.
I'm Robbie, and this is your home to learn from the biggest guests, the brightest minds at the tip of innovation.
Our goal is to help spread the collective knowledge of everyone in our community.
We are breaking crypto out of its echo chamber and taking it to the real world.
Sit back, relax, and enjoy a quick word from some of our awesome partners who make this show possible.
Crypto UX? Broken. AI? Can't trust it. Let Magic Newton set you free. It puts your on-chain transactions on autopilot. Does all the work for you 24/7 so you can go do what you want. The vision of Magic Labs. The creators of embedded wallets, used and backed by the best. See for yourself. Simpler crypto UX, verifiable AI agents. Newton.xyz.
Introducing Asset Runes, the future of decentralized finance. Stablecoins natively on Bitcoin. Hedge against volatility. Diversify your portfolio. All directly from your Bitcoin wallet. Secured by ZK technology. This is Asset Runes. Available now, exclusively on Starknet. All right, Marcel, welcome to the city, man. How's your weekend been? Or your week been?
The week has been great. To be fair, I was a bit jet lagged, but all of the meetings, the alcohol, of course, and just the great news we had this week, kind of kept me alive. And there's so many cool people I know here because I go pretty frequently to New York, so. It's always good. It feels like second home by now.
Nice. So you're originally from Switzerland, which is actually one of the more popular crypto hubs.
I live in Switzerland.
Gotcha.
I'm originally from Germany. I'm actually half Turkish, half German, but grew up near Munich and then spent a lot of time in Berlin, and then had my first company in Berlin in 2017. First crypto cycle I went into, and the regulatory framework was just horrible. The bureaucracy horrible, and taxes horrible. So when I came to found SummerFi, the first investor was a German guy who moved to Switzerland, and he was like, "Look, I'm going to deploy a check, but don't do it in Germany." So that's kind of how I went to Switzerland, and now I'm there for 5 years. Love it.
Yeah, and Switzerland is it's home to a lot of the foundations, right? That have kind of had to exist there because of just having the legal. Or the lack of legal clarity in the States, basically. Yeah.
Yes, yeah. So specifically in Zug, where I live, it's called Crypto Valley. There's one street, and you just see a lot of mailboxes, and all of the big foundations, like Solana is there, for instance. Yeah, it used to be a very active developer community as well. I think Vitalik is the person who actually made Zug kind of Crypto Valley. As far as I know, he did his ICO from Zug with Bitcoin Swiss together. And at least that's what I have in mind. And since then, it kind of became a crypto hub. But by now, it's mostly directors of foundations, more finance-related people. And there's a lot of Polkadot people still there. But it's not like New York nowadays, where you go here, there are a lot of builders, there are a lot of companies. Yeah, it's different.
What's your thoughts about the crypto scene in Dubai? I haven't been.
Oh, you okay?
I've never been there, so yeah.
Okay. I think there are some good people. Yeah. You can't put everyone into the same box, right?
Yeah.
But there's a lot of these influencers, KOLs in Dubai. Yeah. Personally, not the biggest fan. Again, not everyone is the same. They're always good. There are always some bad.
There's just a lot of money there, but people go there because of the legal arbitrage and because of the taxes, and it's just a safe place to be if you launch a token or if you're running a crypto business, etc.
I think launching a token from Dubai is actually illegal, as far as I know. So you're not allowed, the entity is not allowed to be a UAE entity. So issuing a token, I say, as far as I know, is not allowed. But in general, working with crypto assets, all fully kind of, I think, legalized, don't pay any tax. So a lot of people just go there. Often people go there to cash out. or they just go there because you're close to the money, right? And that's something you definitely, for instance, not have in Germany.
Yeah.
In Germany, like you can get like a pre-seed check, maybe a seed round check, but when it comes to like, let's say, serious money, there's not much happening anymore. And in Dubai, I mean, we all know it. You meet the right person and you can get like an 8-figure check within a week done.
Yeah, I mean, the Middle East is going to be deploying a lot more capital into blockchain and AI, respectively, as well as at the convergence of the two, which ironically is where SQD is operating. Let's understand the story about kind of how you guys came to found SQD, but let's think about it from the product perspective.
Yeah, I mean, this is exactly what we're trying to solve eventually. Even prior to like it being called AI agents, we always thought about like a database. Needs to be permissionless. It needs to be open, not closed. These data silos are not very scalable in a sense. They're very hard to maintain, and especially the data that the agents consume is limited in a way where only the companies who actually build these AI models have access to the data. And in our vision, it's more like a database should be accessible by an agent in a way that we think about it like, okay, let's go 2 steps back, virtuals. You launch an agent on virtuals right now, and then you have your thing going on. In the future, our vision would be that you launch an agent and it comes pre-equipped with like a piece of software, which is essentially, we call it a portal. And this piece of software gives you access to all of the data we have in SQD network. And since it's fully digital, there's no like, credit cards needed. The agent could, because most of the agents even have their own cryptocurrency themselves, they could actually swap their token to our token, lock the token, consume all of the data they need. No humans required in between, fully frictionless. This is kind of the vision we have, and this is, I think, what it needs to like go to like this global scale of AI agents.
Yeah, and so one aspect that you're describing here is around the data, right? Around the training data for some models or for agents. Another big concept that I think blockchain and crypto is going to bring to is verifiability, right? Knowing that how different inputs were given to a model, how a agent has been trained, trying to have prevention from agents going rogue. But the one constant factor here, and honestly, you could even think about it as like a consistent variable, is the demand for compute has been increasingly going higher. It's accelerated past, if you look at the energy grid, it's accelerated past hospitals. It's about 3x, I believe, as of like the last couple of months in terms of the amount of power being used in data centers to fuel AI versus like some of the world's largest hospitals. That is what I think that a lot of people are kind of like orienting around when they're building in AI. Is like, this is going to continue to increase this demand. So I'm curious, like, how you think the demand for compute increasing has what consequences does that have on the data problem that you're trying to solve, or what are like the second and third order effects of this consistent demand on the problem and the kind of like market that you're trying to solve?
I think in general it's scalability, right? It's like you need more access to more of everything. You need more compute. That means you need more easier and high performance access to data at an extreme lower cost. And that's like one of the things, like if you operate your own data center, you need staff, right? You need the physical CapEx kind of expenditure to actually have a data center. I mean, you can go to a cloud as well, but you'll pay for that price as well. So the main goal is to get data to a point where it's almost virtually free. It has to get to a point to be virtually free. Think about it like Spotify, right? 20 years ago, when I had like my first Eminem album, it was like, 20 Deutsche Mark, which is like, $10, whatever, and you got like 10, 15 songs. Nowadays, you pay $15 and you have access to every song on the planet. And still, at the end, the artists make their money, right? Because there were new ways found to monetize it. There were new ways to build up this economy. Yes. And if you look at the Spotify movie on Netflix, again, of course, it's a movie or like it's a series, but I still think a lot of the things which we've seen there are actually true. Like nobody believed in it until it happened. And it's similar with data. It has to get to the point where it's virtually free. There's no free lunch in life, so I don't believe in people like offering free services. At one point, like, how is it getting paid? Like, somebody has to pay for something. But so it's all about creating like an incentivized economy where people share, like Uber, right? There's a sharing economy, and everyone still makes money, but the end user has like a lot better experience. And with data right now, we're in a world where you usually go to like the big giants like Snowflake, Databricks of this world, and you pay tremendous amounts of money, and it's like, it's, in my opinion, it's the opposite of scalability. It's like blocking innovation in a way where people should have access to it. It's like, I see data as a public utility. It should be kind of like owned by no one, but kind of like governed by everyone. And especially if you think about the hyperscale of AI agents and how you will have like billions, if not trillions of AI agents in the future, it only works if the cost of data gets reduced drastically. And so the accessibility is higher, and that means more people can build greater stuff and can innovate more.
Yeah.
Innovating finance, global, institutional, and on-chain. Deep liquidity to drive capital efficiency. Now, maximize yields on institutional-grade liquid staking with METH. Unlock $1 trillion of capital via Bitcoin. All of this secured by Mantle's treasury of billions in stables and ETH capital pools. This entire ecosystem is coordinated by a vast network of seasoned VCs that are aiming to create the next generation of banking and financial technology. This is Mantle.
Introducing SummerFi, one of DeFi's oldest and most battle-tested platforms. SummerFi automates your exposure to DeFi's highest quality yield so you can sit back and enjoy this summer. Deposit stablecoins like USDC or USDT and let SummerFi route your funds into optimized, low-risk lending strategies. With over 100 million in instant liquidity and support for over 34 protocols across Ethereum, Arbitrum, and more, you always stay in control. Choose from a wide range of curated strategies reviewed by independent risk experts, all in just a few clicks. So why work hard for your yield when you can be lazy? Start earning now at summer.fi, the home of the lazy summer protocol. So talk us through you mentioned some of these larger techno corporations, and I think there's a arms race for AI right now, obviously, and it's being won by Anthropic and by OpenAI. And then there's this group of people that are, if you think about AI as this abstract kind of superintelligence, there's this group of people building it in this intersection of like decentralized AI that are essentially trying to fight for a future where this superintelligence isn't owned by like the Mag 7 companies, basically.
Yes.
So that's happening in parallel. And then while all this has happening, these large data companies over the last 10, 20 years have had massive successes. And so talk us through what Snowflake is, what their thesis was, why they did well, and then how SQD and SubSquid is kind of like this on-chain version of Snowflake, or could be what they have done for that world into this kind of newer decentralized AI world.
Let's give a good example for the listeners here. So think about it more of like hotel chains. So like 200 years ago, there was like a single hotel, right? Like somebody opened kind of like a hotel. It wasn't even called a hotel, but people could go there, could pay some money, and they could sleep there and eat.
Yeah.
That's like a single database. Like very centralized, single database on your own computer. That's where we were 30, 40 years ago.
Yeah.
Single hotel. Well, then people were like, oh, well, let's open up a hotel chain, logically. So you actually have the same experience. For instance, like with Hilton, you go to Hilton all across the globe, and it's almost the same experience. And that's kind of like the data cloud. That's essentially what Snowflake made. It's like, hey, we're like single databases. Now we're getting it into a cloud, and they specifically have like this data lakehouse. A bit more complicated to explain, but it doesn't matter. It went from single hotel chain, which, it is kind of scalable, but it cannot grow very fast, right? There's a lot of effort still being done. And then nowadays we have Airbnb, completely game changer. So wherever you go on the planet, you have a place to stay at different price points depending on the market. It goes from like very simple sleeping, like Airbnbs, actually like a very simple room, up until, like I need a very luxurious, super penthouse, Manhattan, whatever, 20 grand a night. And there's something for everyone, no frictions in between. And the most important part is the humans, basically, again, the users communicate directly, almost peer-to-peer. And this is where SQD network essentially is, like we call it the first database network, comes into mind. So think about it, single database, data cloud, and now it's like a global database. And that's, again, what I said earlier, it's owned by no one, but it's governed by everyone. So it's like a huge network. We have over 3,000 kind of like small data centers, small like servers, worker nodes attached to it. And even if like half of them get turned off today, for whatever reason, the service still keeps operating. If you turn off like the big data centers, nothing works anymore. So this is essentially where we came from. So it's a completely different way of thinking about it. Like, I really don't like vendor lock-ins at all. Every time we had to sign some kind of a deal where we're getting like locked into something for a certain period of time without even really knowing if we want to use that service for this long, I think that's a very old-fashioned business model. And it just, as I mentioned before, it kind of like hinders the growth. It stalls growth because you cannot move freely. With Airbnb, you can move freely. With SQD network, everyone in the future will be able to add data. Everyone will be able to consume data. And this data is like a public thing. It's for everyone. And that's really the key thing. All of the data in Snowflake is Snowflake's data, essentially. Like they own it, like Google, right? Think about 23andMe. I don't know if you know 23andMe, yeah. So I was actually one of the people who did a DNA test there because my dad, thank you, Dad, he forced me to do it when I was a bit younger. Well, the data got all sold,
of course,
right? And it's the same thing. I just don't believe in the future where, especially now when we come back to this like super intelligence, huge AI models, I don't believe in a world where this power is kind of governed by a handful of people in an advisory board or that just doesn't work, and it seems very scary to me, to be honest. Yeah. It's a huge security issue also.
So one of the core things that I'd like to just press on that you mentioned is some of the liveness conversation. So blockchains are essentially databases with a distributed set of nodes that achieve consensus. Doing this allows you to have verifiability, guarantees, et cetera. But one of the core properties is liveness. So when you're running these like high throughput applications, so for example, in SQD's case, something like PancakeSwap, right? These are dependent on liveness of the underlying infrastructure to provide the users a really quality experience, right? And so without these guarantees, these applications would suffer dramatically. In the traditional world, you have these concepts of SLAs, service level agreements, where you have like a specification about the liveness guarantees, the uptime, these types of things. When it comes to SQD, even just more broadly, like these database kind of agreements and liveness concerns, what is your response if I'm to ask you, how can you guarantee that your service is going to provide me with 100% uptime, and what do I get if not? Like, is that something that you guys run into? And like, what is your answer to that?
First of all, you can go online, you can go to our dashboard, and the network has 100% uptime since it launched, day one. Never has been offline. Yes, nodes at times do go offline. Power of decentralization. Often people ask me like, do we need something decentralized, and why do you have something decentralized in general? And my main answer here is like, you should never build something to just make it decentralized for the sense of decentralizing something. No, you have to solve a problem. And the problem we had in mind, just the only logical way to solve it was to decentralize. And essentially here, of course, big corporates, they come to us, like for instance, we have like a few bigger Web2 clients, which are just known to this SLA world.
Of course.
And for these kind of clients, we abstract a lot of the technology, a lot of the crypto stuff kind of away. So yes, we do sign an SLA with them. We put our uptimes there. Usually there's like a small margin of error for us. But up until today, we never had a downtime on our services. So we just continue to believe in what we've built. And that was also a reason, because we have a lot of redundancy in the network. It's very, very unlikely, statistically speaking, that from the 3,000 nodes we have right now, and the network has been growing like crazy this year, that all of them would go down at once, right? And this is kind of what would need to happen. Sure, it might cause, let's say, performance issues. If we only go down to like 10 nodes and then all of our clients request data at the same time, it could get slower, but it's very unlikely to happen. So it's a statistical thing.
Okay.
It's more mathematical and statistical.
Yeah. So how does the business model of these database companies differ from in like traditional worlds? Like when you're working with traditional clients versus like a DEX, a lending market, et cetera. How do those business models differ? And like what is the usual way that a company like SQD would actually generate revenue consistently? Are we looking at like monthly agreements for different services? And then I think this is going to tie into like how this kind of comes into this broader idea that we're seeing right now in the space more than ever around trying to find profitable companies to invest in.
This is a really good question. So first of all, a lot of the products we build on top of our network have similar traditional business models.
Okay.
There are SLAs, there are subscription models, right? For instance, we have SQD Cloud. You sign up, you can actually calculate how much you need to store, how much you need to host, and then you basically get like a pricing. There's an SLA attached to it, and then you get what you pay for.
Yeah.
Very simple, very traditional. Then we have a tooling part, the SDK, that's open source, free to use, because of course we want people to try out our tools, and this is for adoption. I think it's very important that this part is always free, and that's, again, very standard also in the Web 2 world. And then we have SQD Network right now, which is our main focus. This is where we are planning to get most of the revenues on chain. As of today, it's like we still call it like in the bootstrapping phase. So the network itself does not, like there's a fee switch, and that fee switch is not turned on yet. At the moment, in order to get access to SQD data, you lock SQD. And this will always stay the same. So the main thing is like we don't believe in paying for data in a volatile asset. It doesn't make any sense. We've seen it with other companies in the infrastructure space, and their tokens and their products have desperately failed because it's first bad for accounting. Second, you don't know what you get. You don't know what you pay for. So our idea was we still want the token to be valuable, right? We still want people to use it because it has to be decentralized and permissionless. So the easiest way and the most smart way is like, okay, you need data. You have the tokens, you lock the tokens. As long as you have tokens locked, you can consume data. The more tokens, the more bandwidth. Think of it more like an ISP, like internet service provider. So if you want fast, high-speed internet, you have to lock a bit more tokens. If you just want like basic internet, here you go. And essentially you take the data, and once you don't need it anymore, you unlock the tokens, and then you basically paid nothing.
Yeah.
You paid with the opportunity cost of the token and its volatility, of course, but it's a one-time thing. You do it, and then you move on. At the same time, like in the Web 2 world, data is being charged heavily. The bandwidth is charged heavily. And again, coming back to this idea of having it almost virtually free, we thought this is like the smartest way to make it almost virtually free. And then, of course, the network revenues, on-chain revenues are super important for us. I mean, our other products are doing pretty well. I think many people know it. We have over like 200 B2B clients, big projects, PancakeSwap, GMX, Shiba Inu. Many use it. We're very proud of that. But at the same time, the network also has to generate revenues in the future. And we have this network fee switch. So the people who lock the tokens, at one point we'll turn on a fee switch. For instance, just some arbitrary number right now. Let's just say it's like 1% fee annual. So if you lock like 1 million tokens, 1% of those will go into the network as a fee.
Yeah. I mean, I think that we're just going to keep seeing more and more iterations of that as a result of Trump coming into office with the new administration, and then just other teams pushing the boundaries on what's possible as far as buybacks goes, as far as tokenomics goes. With regards to the actual network itself, reminds me a lot of basically what like subgraphs have done and the graph protocol. I'm curious, like why is SQD any better than something like the graph, and how is it defensible to another person coming in and just trying to attack this same market?
I mean, this is probably like a better question for like Dimitri, but I mean he's like the wizard. But essentially, the graph was built in a different era. Like in the crypto world, stuff moves very fast, and they were built for like the DeFi era. So it's a different kind of speed. They were specifically built for Ethereum. A lot less transactions, slower. The world nowadays is like Solana kind of speed. So, and then they're very dependent on the RPC nodes, which in general are very slow. So building a subgraph has like a UX issue, which a lot of our clients don't like. That's why they transitioned from subgraphs. Then also the sync speed. So basically syncing the subgraph, it takes a lot of time. We're speaking about like days versus minutes or seconds if you use SQD. And those are like two of the main reasons clients come to us. They usually come at the point where what they have, the current solution, doesn't work anymore. So it's very unlikely that somebody has a working infrastructure and just says, oh, I'll migrate to to something else. No, this is never, those are not like how our sales cycles work. It's like people come to us at the point where the problem is there. It's like, oh shit, like this doesn't work anymore, it's slow, it's annoying, and then they look for new solutions, and then we have a very organic inflow of clients. So we never really, like, of course we have a small BD team, but we don't do heavy outreach. Gotcha. We've never done that. Like, just clients come because they like the tool, and it's like word of mouth that kind of spreads it over time.
Yeah, interesting. Okay, so...
and one more thing to say, like, again, the graph are like pioneers in the space. Right? So they actually, like, they played a crucial role.
Yes.
And, but they also are lacking, for instance, like good Solana data. They just can't deliver it. No substrate data as well, like BitTensor and stuff. They don't have it, so...
So there's that market segment that's happening, right? Where it's like competitive within the entire space for like this new, multi-chain environment, right? Hundreds of chains now. Power law is definitely going to play a part here and it already is, where a lot of the value is just going to kind of reside on 1, 2, 5, 10 chains rather than hundreds likely. But I also think that there's going to be hundreds and hundreds of chains that will exist for specific reasons. So that's one thing. The other massive market that is probably the much larger opportunity here is all of the people coming into the space from the institutional world. And they want data because they need to make educated decisions about the market. And they have their usual Bloomberg terminal, they have tons of just traditional data providers, and the quality that they're used to is much more sophisticated and has been around much longer than the crypto market data. So how are you thinking about the opportunity for that kind of market segment? Like, what is the opportunity there in your conversations with speaking to these capital allocators, managers? What is it that they actually want from data for this industry?
First of all, I think it's kind of like a new gold rush, which is happening right now. A lot of data companies are trying to jump on this, let's call it like a small hype, like RWAs. I mean, people are throwing all sorts of number around, like 30 trillion is coming on chain, whatever. I was here at the Battlefin conference this week, and we just noticed that a lot of the big asset managers are like very, very interested in bringing their assets on chain. Okay. It seems to be the future, and of course they're very data hungry, and the willingness to pay. So coming back a bit more about like subgraphs and like Web3, the willingness to pay from a lot of the developer companies, a lot of the labs and foundations, is nowhere near the willingness to pay of a multi-billion asset manager company.
Of course.
There's a lot more to manage, a lot more potential.
But what do they want, though?
So what do they want?
Like, what are they, like, when you speak to them, what data are they, like, are they looking for data to make decisions on investing, on what, what
there are two things. So depending on the size of the asset manager, the really big ones, I think they're more on like risk mitigation kind of side of the data. And then there's smaller trading companies which have a lot more, let's say they're more risk averse, they're more in like leveraging stuff. So they're more looking out for alpha, right? So, and with alpha, I mean like going beyond like the top 10 coins.
Okay.
Because most of the big asset managers, like let's face it, just like they will not trade some kind of meme coin on Solana, right?
Course not.
Of course not.
But smaller firms will, right?
Yes, exactly.
Maybe not memes, but they're going to try to
not
find
memes,
some sort of like edge in the market somehow.
Yes.
But like, what data do they want? Is like is it transaction volume? Like there's like REV, like Blockworks has a ton of great data around like REV and transactions, addresses. there's a ton of providers out there, but yeah, is there something specific that you're seeing, like these alpha seekers?
If I would to call the specific thing what we're focusing on, I would give a lot of information now to competitors. Yeah. But we're trying to work like hand in hand. We actually have like 2 big asset managers now, like multi-billion companies, which are working with us hand in hand. We're crafting this new product, Ocean Stream, around the information the customers give us.
So what is Ocean Stream?
Ocean Stream is kind of like a Bloomberg terminal for Web3. It's not exactly going to be a Bloomberg terminal, but it's supposed to be, because like it's built on top of SQD network. We have the fastest data, and especially we have all data. So we can we really dive deep into the ocean, like the last trenches, the last depths of liquidity of traders. We see it, and we have these insights in real time. And with this data, we essentially build like dashboard kind of solution for the clients, and depending on which kind of client. So we're focusing, as I mentioned, on 2 products, like 2 subcategories. One is more like alpha driven, which is probably maybe even a bit more like consumer facing for, like, let's say like somebody who's just like a day trader kind of guy who doesn't have the liabilities of like a big fund, and at the same time like more on the risk mitigation side for like the bigger asset managers. And we're talking about like the latency, right? Especially the latency, and I don't want to go into too more details now. That's really where we have a huge competitive edge to anything else in the Web3 space at the moment.
Understood. Another active institutional angle here is around these treasury vehicles that have recently been coming out around Bitcoin primarily. But Christian Engermeyer put out a post a couple days back around SQD and trying to build a treasury vehicle for SQD. What's the story behind working with Christian, and what is this treasury vehicle aiming to achieve other than just accumulating SQD, right?
Yeah, I mean, good question. So I met Christian the first time roundabout in November 24. One of his partners who invested into Snowflake, he read a thesis blog from M31 Capital, and they actually compared us to Snowflake, says like a decentralized Snowflake, and they did like a Bill Ackman kind of style activist blog post about us. And he just like suddenly like read it, and he noticed that we were connected in the network, so he reached out to me. And that's how I met Christian. And then Christian, of course, he did like his due diligence process. At that point, the token was at all-time low, but customers' revenues were like growing drastically. And we openly spoke, and he actually just saw like the opportunity and said, look, there's like an undervalued asset, in his opinion. There's a great team, great builders, great product, but they have to learn a bit more on the marketing side. They have to, position their brand awareness, and that's where he came in, and he thinks he can help. And since then, I mean, I think we have been pretty much delivering very well. We started like growing the brand to a bigger audience now. We're trying to abstract stuff. We're trying to explain it more and more easy. And what was the second part of the question?
Around the details with the strategy vehicle.
Yeah, exactly.
Or the treasury vehicle.
Yes, so it's all about institutionalizing, right? I mean, we saw it with like Sailor, right?
Of course.
They're not like in crypto. The money flows very fast, and also funds, if you can even call them funds at sometimes, it's like they're in and out, right? Like vestings are short compared to traditional assets. Tokens get flipped very, very often. So he was always like a big fan of like these long hold kind of vehicles. So something that it just acquires and holds. And at the same time, there is a lot of investors, especially still like in Europe, who they don't touch any crypto assets.
Of course, yeah.
It's like it's too far away for them. Like maybe they own a bit of Bitcoin as a speculative asset, but they're very traditional. So it's opening up a new market. It has a very positive effect on the token itself, because these, like especially his vehicle, it's just meant to acquire SQD and then stake SQD. So it's not only about like buying tokens, it's actually about providing a value to the network, because the token's staked and he has to run nodes in order to stake these tokens. So the network grows. At the same time, it opens up new possibilities for other investors who wouldn't be able to invest in this kind of an asset. And I mean, that's essentially it. And there's a big trend going on right now. I mean, let's face it. I hear like over 100 like treasury companies are being founded left and right, but mostly for the big cap tokens. But like Christian's point of view, he was actually through like launching a public vehicle or like a treasury vehicle for like mid-cap tokens where there's not much going on, and the liquidity isn't as deep as with large cap tokens yet. These vehicles and treasury companies actually have a tremendous impact, or could have a tremendous impact on liquidity, also on the security of a network. So it's like a win-win-win situation for everyone. It opens the market for people who couldn't acquire the asset. It scales the network at the same time. And of course, it kind of like takes a part of the circulating supply and puts it into, let's just say, into a treasury that has like a value add for the network. And this is something that we personally, or like I personally think is very, very interesting. It's a very good dynamic, and it kind of also blends into like our next steps. So we're like trying to institutionalize at the moment. I think many people are probably aware of that right now. We just launched like this product this week. We have another big product launch coming up on the Solana side. In my opinion, it's going to be a complete game changer. And then, of course, our focus is revenues. I mean, we are essentially a B2B company, and our goal is to grow the revenues. There's actually another third product coming later this year. And now with like more exchanges, more liquidity being added to the token and the network, we're just in a growth phase at the moment. So I think we're very interested to also then bring these revenues on chain. So we're gonna introduce a new tokenomics design very soon. It's gonna be like a gradual rollout. So these are the things to expect at SQD probably till the end of this year.
Marcel, appreciate you coming, man.
Thank you.
Thank you.